This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. World food prices rose in May at their fastest monthly rate in more than a decade, posting a 12th consecutive monthly increase to hit their highest level since September 2011, the United Nations Food Agency said on Thursday. FAO also issued its first forecast for world cereal production in 2021, predicting output of nearly 2.821 billion tons, a new record and 1.9% up on 2020 levels. The Food and Agriculture Organization's Food Price Index, which measures monthly changes for a basket of cereals, oilseeds, dairy products, meat and sugar, averaged 127.1 points last month versus a revised 121.3 in April. The April figure was previously given as 120.9.
Top oil exporter Saudi Arabia has raised the July official selling prices, OSPs, of most crude grades it sells to Asia, a pricing document showed on Thursday. It set the July OSP for the flagship Arab light crude at $1.90 a barrel above the Oman, Dubai average for Asia, up 20 cents from June. Saudi term crude supplies to Asia are priced as a differential to the Oman, Dubai average.
Moving on to the top news in the energy sector.
U.S. crude stocks fell more than expected last week, while fuel stocks rose in a pre-holiday rebound from drawdowns that occurred during the Colonial Pipeline outage, the Energy Information Administration said on Thursday. Crude inventories fell by 5.1 million barrels in the week ended May 28, compared with analysts' expectations for a decrease of 2.4 million barrels. Gasoline stocks rose by 1.5 million barrels, contrary to expectations for a 1.5 million barrel drop. Gasoline products supplied, a measure of demand, fell 3.5% to 9.1 million barrels per day.
UK demand for road fuel, mainly petrol and diesel, has returned to pre-pandemic levels, official data released on Thursday showed, after the country eased coronavirus-related restrictions following a successful vaccination program. Fuel consumption dropped sharply in March 2020 as the UK government announced tight restrictions on movement. The data released by Department for Business, Energy and Industrial Strategy showed daily average road fuel sales at sampled filling stations in Great Britain at the end of May was above 20,000 litres, the highest level since February 2020.
Next, we have the top news in metal markets.
The world's coal producers are currently planning as many as 432 new mine projects with 2.28 billion tons of annual output capacity, research published on Thursday showed, putting targets for slowing global climate change at risk. China, Australia, India and Russia account for more than three-quarters of the new projects, according to a study by US think tank Global Energy Monitor. China alone is now building another 452 million tons of annual production capacity, it said. While the IEA has just called for a giant leap toward net zero emissions, coal producers' plans to expand capacity 30% by 2030 would be a leap backward, said Ryan Driscoll-Tate, Global Energy Monitor research analyst and lead author of the report.
Output of primary aluminium in China will increase until 2024, after which secondary, or recycled metal will start to claim a bigger share of plateauing consumption, state-backed research house Antake said on Thursday. China is by far the world's biggest aluminium maker, churning out a record 37.08 million tons in 2020. However, its government wants to cap annual smelting capacity at 45 million tons and producers, under pressure to reduce emissions, are looking to recycle more scrap metal instead. There will be the growth in secondary aluminium production. The demand for primary aluminium will tend to decline. We will now look at the top news in the agricultural sector. India is considering reducing import taxes on edible oils after cooking oil prices hit record highs last month. Two government and two industry officials told Reuters, to reduce food costs in the world's biggest vegetable oil importer. While no decision has been made, the tax reduction could lower local prices and boost consumption, giving support to Malaysian palm oil, along with soy and sunflower oil prices, and dampening prices of local oilseeds such as rapeseed, soybean and groundnut. A proposal to lower the import duty on edible oils is under review. A government official with knowledge of the matter who asked to remain unidentified said on Wednesday.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.